The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome everybody to the headquarters of technical trading and investing, TFNN.com. Yes, I'm here in the hizzy today. Actually, in the headquarters, in the think tank of higher education and trading. Certainly have a nice move out here back toward the lows of the day. 1862.82 on the S&P cash, and that's with about 2 billion shares. On a Friday, of course, you don't have a lot of volume a lot of times. 2 billion shares again. Probably would like to see a lot more, but being a Friday, probably not a lot. My guess is that volume will come into the downside in next week. Now, what we do have, of course, is a big move probably going into late Tuesday with a little bit of fun buying. So Monday is probably going to be the weakest day, but my guess is that if we do get any significant move down, that we're probably going to see the selling swamp, the actual buying for fund buying. It's been diminishing over the last few months. I don't think that's going to change, but I had a question in the email about that before, what effect fund buying would be. I think they're going to try to keep this up, and we'll probably continue moving down, but it's going to be, I think, 2 steps back, 1 step forward. It's going to be very hard probably to hold short positions, as it has been already. But we'll continue to figure out just how to do it. Anyway, always like to get started on a good foot, and hopefully that means that someone's going to give us a call at 877-927-6648, or maybe you can put a message in the den. Don't have a lot. Actually was going through lots of earnings, writing newsletters today. So we're probably going to have to wing it just a little bit in today's show. And I like to be prepared. I like to already know what I'm going to talk about, but there's a great deal of things going on in the market, and we will look at that too. So give me just a second. I need to actually, there we go. Just wanted to look and see if there was anything else that we were looking at. We had a nice move in gold out here today. Probably not uncommon when we look at what is transpiring in the news with Mr. Putin. But $1,300 on gold. It's not a huge bounce, and I'll look at the contracts tonight, but it's not like I see a lot of energy out of this. And my guess is that if energy intentions diminish over the weekend, we'll probably see probably a 10-point pullback Monday, or actually Sunday night, on gold. And then as I'd love to see 1280 retested again. If we had a lighter volume, then maybe I could go for a bullish case. I'm still hoping for 1175 on gold. And of course, with the pullback, we're seeing a lot of the same good babies being tossed out with the bad babies. But I have been going through a great deal of the earnings, and just about everything we've seen out there, I've come up with a theory of the pop and the drop. When we were talking about Amazon in the den last night, we were seeing 345, 344, and as we got closer to getting into the conference call after the earnings, it really looked like the stock was starting to fade. So I actually had a fairly decent after-hours trade in this. I didn't hold it down to the low of day 303 today, but it certainly is coming in with heavier volume. We're probably going to be seeing that across a lot of these bigger stocks that have been problematic at best. Amazon, of course, I think a lot of people finally in the investment community getting a little bit bored with the story that they'll eventually be able to make money anytime they want. Of course, that time keeps getting pushed out farther. But if you read the financial blogs or the CNBCs of the world, they're basically saying that the expenses going up are what's really hurting Amazon today. I think the truth of the matter is that they've given this company a free pass. Real value for this thing, if it did turn on full earnings today, is probably about $150 a share. So this thing could fall a great deal. Maybe there's more earnings in there that I see. It is a great company, and it's a great company that really doesn't make any money now. Now, will in the future? Maybe it will. But most of these companies that have nebulous earnings also have nebulous valuations. Some of the other stocks, the super high flyers out here that I'm watching today are Tesla. This thing pretty much looks like it did everything. It got up to what, 219.33 a few days ago. Looks like this one is probably pretty much its ABC down out here. Not a lot of volume yet. This $200 level seems like a lot of people where they want to get in. Again, to really get a decent risk reward, this thing's probably going to have to get into the 230, 235 range. And no matter what they say about what they're selling out there, this is yet another company that is making money on subsidies, and those subsidies will be going away late 2016, early 2017. So a lot of these companies only have a year or two to really turn around things, why governments are actually keeping them afloat. In fact, what is it, Sweden or Norway, where almost all their real earnings come from, is going to be getting out of that business also. And that is also problematic. So not a whole lot of cars there, but because of the incentives, make a huge amount out of that. But it's going to be tough. We look at other companies that had earnings last night, MSFT. Probably one of the brighter stars out here. I was thinking that this company could trade lower based on the new CEO maybe throwing a few things in that may be in the books that he wanted to get in. That was my thought. I still have that. The new CEO may not have been in there long enough to actually get those in the first earnings report, and so we still need to probably wait another 3 months to see all the bad news coming out of Microsoft, if there is any. But earnings call went fairly good if you listened to it. And with the new CEO, I think that especially the analyst community is a lot happier. Ballmer, that had been there, since 2000, 2001, whatever, hasn't been in an earnings call since 2004. He took some flack for some stupid stuff he did and has really never been back. He's done some appearances, but not in front of the financial community. That the new CEO came in, went toe-to-toe, did the whole thing himself, only briefly turning it over to the CFO, and answering and being able to answer almost all the questions, kind of settled the community. So I'm not surprised that this one's doing better than most out here today. But Microsoft, of course, is going to have probably a good 18 months just based on the upgrade cycle out of Windows XP. And I think we've seen that from the move from 30 to 40 bucks. And, of course, the big lie over the last year has been the end of the PC. But if you look at Microsoft and you look at Intel, I haven't seen a lot of that. I would hope that you would give me a call at 877-927-6648. We're probably going to be having a day where we're going to go through a lot of the earnings from last night. and the charts for the rest of the show. So if you have something specific, make sure to ask about it in the den or give us a call. And let's see what else I have up here on my list of stuff. Oh, I got plenty of time. 3 minutes. I wanted to go through, if I can actually find it here. There it is. I wanted to go through some of my actual earnings. There we go. Hang on. And see how they did. Well, change. Cirrus Logic. Some of these semiconductors are all over the place. Cirrus Logic, one of the ones up on a rather bad day, which will give you a good indication. Unfortunately for Cirrus Logic, and going against some heavy volume days on the downside. November 11th from last fall, this thing plummeted it down with about 14.4 million shares, and as we get back into that, going to find some steep resistance. Good volume and a good day on a down day in the markets for Cirrus Logic, and last I see up 5.5%. But a lot of these have already come down on significant volume, and this thing's probably going to continue to see resistance at about the $22 level. Another one that reported after the bell last night was Altera. If you've ever listened to me about Altera, how important this particular stock is, because it gives us a really good idea of what's happening in near-term demand for chips. And we've got a caller, so I'll get back to Altera in a minute. How you doing today, Wilbur?
I'm doing good. I'm looking for Twitter. It's hitting that big volume day where there was 24 million shares, and I'm wondering, are we going low because we have lockup in expirations pretty soon, and they're announcing their earnings early, I think next week or something.
Yeah,
we're going.
Well, here's the problem. Most of what we do is, hang on a second here.
Because the government twits, you know that? They're tweeting all the time and leaking out all kinds of secrets, you know?
Yeah, I know. The problem I have with Twitter is they don't have a good idea of how they're going to make money.
They don't have to.
Why?
It's like Yahoo when it first came out. It went up to $50 a share and then went down to $15. Who cares if they make money? It's all about name recognition.
For a very short amount of time. But I can probably...
People are dumb, they'll buy anything, you know what I mean? They don't care about earnings. It's all about recognition. And look at Amazon. It hasn't made money in how many years?
Yeah, but they are a business that can make money. The question is, how much will they make? I think they're overpriced. Twitter really doesn't make any money and hasn't, so we'll have to look at that. Anyway, we'll be back in a minute.
Thank you. Look at it. Thank you, sir.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we were talking about Twitter before we went to the break. Their earnings are on the 29th. And I don't agree that no one cares that they don't make money. I have a feeling that this is going to be a big week for them coming up. But with no history and them just starting to sell ads, I have no idea what they're going to report. And no prognosis, no profit. So I'm going to have a tough time figuring out what to do on that. So I'm going to steer clear. Bill from Springfield, College Town, Missouri. How you doing today?
Just fine, thank you. Checking on 2 or 3 stocks here. UVXY, the Dow made a new low just now, and UV didn't make a new high. I don't understand the charts.
Well, because it is volatility. It is not where the markets actually move.
Okay.
So I take it you get my newsletter?
Yes, sir.
Did you get the special I did on trading volatility?
Yes, sir.
Okay. Well, if you have more questions on that, why don't you email me? But volatility isn't price movement in the actually exact price movement in the index. It is the price movement, or VIX is the price movement of the options. And guess what happens about noon? What happens about noontime on Friday is premium starts coming out for the weekend. And what you'll see here is even if the market moves lower, the VIX will have trouble moving lower because the premium is moving out. In fact, the VIX is just the premium of the out of the money puts and calls. It is not the premium of the calls that are in the money. So you have to, it is a little different than most people would think. And, of course, one of the other things is that that every minute into this weekend is basically being discounted into Monday morning's open. So the VIX is calculated every single minute that the market is open, but it also will depreciate every single moment that the markets aren't open.
Or closed.
Yeah, okay. They're closed. So when it moves like that, it's going to be a little weird. So you have to kind of get used to it, and it probably takes a little while to actually figure out trading volatility in the VIX. But you're fine out there. I wouldn't worry about it. This is going to probably...
I'm not too worried, just trying to understand it. And I did notice that the VIX did not make a new high either when the Dow made a new low. So that's all about how the options are moving behind the marketplace. So don't be... They will eventually line back up, but most likely that's going to happen probably about noontime on Monday. Okay, a quick question on Joe Coffee, J-O.
Yep.
There's several gaps going back last 3 months or so. Do you think that those will be filled?
On commodities, a little less than stocks. On stocks, it's a lot easier to find people that are trading in and out of it. For a lot of the participants in commodities like coffee, they literally are like Starbucks investing in this for a long term. So you don't see a lot of people getting in and out as much as you would something like a hot tech stock. So there are a few more people that have entrenched positions. So my idea on this is that you just had and we talked about it yesterday, had a really good signal, at least on this chart, that this thing did not look good for higher prices out here when it was testing the previous high on almost 50% of the volume. And you had two dojis as warnings. And I also said that you'd probably, when we looked at JVA, which was a stock that made a nice Gartley, I said, you wanted volume in about 3 days. You never got the volume. So normally you get 1, 2, 3 days. You don't get the volume in 3 days in a nice move up like that, or you don't break the top. I normally ring the register, take my money, and leave. So I would say that 3-day rule comes into effect a lot when you come. And some of these things start moving after 3 days. But normally, if I don't see any real decent volume come in, no sign of strength in 3 days, I'm really looking for the exits. So when we go back to coffee itself, or JO, the ETF for this thing, where can it come back on the charts? Certainly can come back to 37. I think your first price back here is 37.11. And I think that there's a good chance you'll probably get at least into the mid 37s, if not into that lower 37.11, probably early next week. Anyway, we'll be back. We'll be back in just a minute. I think you've got some more, so hang on.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
And we are back, and we're going back to Bill. And how you doing, Bill?
Just fine, thank you.
Okay, so you wanted to look.
Question.
Go ahead.
The amount of gold, AUY.
Yeah, I don't know a lot. I don't know a lot about the stock, but to me, it looks like a broken stock. I'd have to dig back into the news. You know what's wrong with it?
No, Tom mentioned last night that they go to $3, and they seem to have bought a lot of gold
in the ground. Yeah, this is a broken stock that looks to me like I'd have to look through their books, but this looks to me like a stock that could go BK. And Tom probably knows a lot more than me, but when you see moves like this, and I don't like that this last leg actually picked up strength compared to the leg down, and with gold going up. So, this is the kind of death spiral. I don't know anything about the finances, but if I looked at this chart, I'd say that there's a better than a average chance this thing's got a lot lower. $3, I don't think it would have any problem with that. From just looking at the chart. So I would probably stay away from it.
Well, I owned it back in 2008 when it hit $3. Yeah, $3.50, $3.31. Yeah, I owned it back there and traded it, and so on and so on. Okay, may go BK. Yikes.
This is the kind of chart that does that. I'm not saying it's going to. I'd have to do a lot more research on it, but I would be scared to be in this stock.
Okay. Yeah, I looked at the volumes and so forth on a 6-year chart. Yeah.
Yeah, Tom knows a lot more about the financials in these things, and
Okay.
I would say $3 looks charitable. So you'd really need to find out what these guys have. Now, gold goes to 2,500. Maybe this thing's worth something. But right now, if it can't get moving at 1,300 on gold, you got problems.
I understand. Thank you very much.
You bet. We're going to go to, stay out. We're going to go to John in Philly. How you doing today, John?
David, I'm calling to give you a big thank you for prior works. In particular, a couple of weeks back, you gave a real thorough discussion about Alibaba in reference to its upcoming IPO, or at least plans thereof, and describing in detail how the business enterprise and the accounting thereof, income statements, balance sheets, and financial reporting, generally speaking, was something that we as Americans could get very little factual information upon. So thanks for that. So what I wanted to ask specifically was, since the description that you laid out, which was quite thorough, since it flies in the face of all legal, accounting, and financial reporting standards that have, seemingly existed here in this country for a period of decades, have you seen any statements, justifications, opinions, policy rules coming out of either U.S. Treasury, Department of Justice, SEC, or the FASB?
I've called
the
SEC.
That would justify.
Yeah, SEC handles that, and I've called them 3 times. No response. Emailed them. No response. So I don't know what to tell you.
Would you with something as on the surface being so starkly against all prior conventions, policies, would you anticipate some official statement to policy forthcoming to justify, such a procedure, or would you think it would just be left under the carpet?
It's got to be, if everybody that's involved in the IPO, I mean the street names, don't put it in the prospectus, they're going to get sued out of existence. They'll end up eating all of it. So somewhere it's going to be in there. Now, when the stock market was up on Monday or whatever it was, Tuesday, I heard a whole bunch of stuff about how the red herring, which is the original prospectus that everybody kind of secretly hands around, would be out after the close that night or the next night, and nothing. Right? So I don't know why people are running around putting out rumors like that are patently untrue, but I continue to see that. Now, in that original prospectus, they better have the risks of having poor accounting in it. So it's going to have to be written in there somewhere. Now, 98% of people probably never read the prospectus. So as long as it's in there, they've basically given everybody fair warning, even if they don't talk about it. And I don't know if you're going to find CNBC or Bloomberg with the stones to talk about it, but maybe you will. I have a feeling that maybe Charlie Gasparino or some of these other guys might try to make some hay out of it, but they're not a lot.
You don't. Would you anticipate that agency head Mary Jo White would be called on this at all?
No, she's like I've said before. We've even in the high frequency trade department.
Yes.
She's done everything to avoid the subject, and I don't know if she's looking for a nice cushy job on exit, like everybody else has gotten. But she's put in her 20, 25 years in justice, and I think maybe she's ready to cash in.
David, could I turn the topic of the conversation, still sticking with Alibaba, but I've always been confused about the history of at least the people who are spoken to be the founders of this enterprise, and the gentleman's name, who is ostensibly chief executive, is he an American who happened to go to China? Was this a Chinese enterprise? Is it something else? Could you shed light on that, please?
Yes. To be the CEO of a Chinese company, you've got to be Chinese. To be an owner of the company, you have to be Chinese.
Okay.
There's a bunch of holding companies and sub-holding companies and legal mumbo-jumbo that's going to allow people to buy stock in a company where you own really nothing. You own it's kind of like the difference between an ETF and an ETN. These apparently will be the equivalent of electronically traded notes, but stock. But stock in a company that really kind of sort of owns Alibaba, but, if with a wave of a pen, the Chinese government could basically say, sayonara, see you later. It's
something akin to a depository receipt, which isn't actually an equity share, but some...
Well, I think you can actually have a share of a company that owns Alibaba with something like a depository share. So you're going to own stock in a company. It's just not going to be Alibaba. It's going to be a company that owns shares of, it's just nuts. And that's
fabulous. That's absolutely fabulous.
That's the whole point that I'm pushing on these things, is that you really don't know. And the way that I think the SEC is saying that they're going to get around getting the real books for Alibaba is getting the real books for the shadowy holding company.
Gotcha.
Okay, and then they're going to say, well, that company's got it now. You may do something like that, but to me, it's just a whole shell game, and we still see all those big accounting firms that are over there under suspension by the SEC and in double secret probation, and no answer or any other questions. Those are other questions I've sent the SEC with no response. So the SEC, to me, right now is just a giant black hole of the three monkeys with their, hands over the mouth, ears, and eyes.
Thank you for elaborating on that. May I lastly ask, the man who is chief executive and or founder of Alibaba, do I correctly recall that person was in the U.S. and working for a number of U.S. companies over the years and times gone by?
The guy that's running the company, I think, went to Harvard, but is Chinese.
I see.
He has been over here. They had him on Bloomberg, I don't know, a few weeks or months ago.
Yes.
The guy that actually owns it is is an older guy, and he's worth like $10 billion already.
I see.
So there's the whole thing of who runs it and who owns it. The guy that really owns it isn't the founder. He's the guy that got the cash behind it. And like I said, this thing is opaque as can be.
Yes.
And you really don't get a lot of answers. Now, to tell you the truth, before a prospectus goes out, that's not uncommon.
Yes.
But this one, it looks to me like they're going to have a contortionist to really get it working correctly. So I don't know how this thing is going to come out the door. And to tell you the truth, I think the thing would have been out the door already if they'd already had everything solved legally. And I think that still comes down to that. Why they said that they were going to go on the New York Stock Exchange without having everything else fixed is beyond me, but what can you say?
Thanks so much for the elaboration, David. Appreciate it.
It's a tough one. I'm just going to say stay away, just like Facebook at the beginning. There's going to be too much brouhaha. Probably not going to be easy to short. My guess is that they're going to force people into non-margin accounts on that stock. They're going to probably do everything they can for hook and crook, and it may even involve a sliver deal so that they can get the stock out, run it up, and then start really distributing that $160 billion of stock that everybody's estimating right now, $160 to $180 billion, the largest IPO. And I don't know what since we don't know what the real earnings are, what's their EPS going to be? But pretty tough. Anyway, thanks for the call.
Thank you.
Okay. Had some questions. Of course, we've talked about Yahoo and Alibaba. And interestingly enough, I've got Yahoo up here. But, any way you look at it, if the valuations on Alibaba are correct, that valuates Yahoo at about $2 a share right now. Maybe $3 a share, something like that. But a lot of these companies have popped and dropped from earnings. Of course, everybody came out. Earnings were big for Alibaba. It's come right back in and filled the gap. Not a lot of volume out here. But to me, basically, you've got Yahoo for free almost on this deal. And one of the reasons I think we're going back to almost nothing on Yahoo is that there's a company that actually will let you trade stocks in companies that are not public, that are still private. And a lot of people are getting out of Yahoo and just getting in for the straight play in this, second, maybe someone in the den will remind me, Second Life, the second market is what the name of it is. And a lot of people are just going ahead and selling Yahoo and going directly into the secondary market and buying shares of Alibaba already as a private ongoing deal. So keep an eye on that. Anyway, you can be like John and Bill and the rest and give me a call at 877-927-6648. We're going to get back to a few of them. Someone brought up in the den that GE had a Gartley pattern out here, and my God, it does. And boy, is it a bearish-looking Gartley out here. And you may not even get the D target out here at 27.28. It's going to be very interesting. What can you say? Got that high volume pop out here that's probably going to act as support. General Electric earnings date. Okay. They've already come out. The next date I have for them is July 18th. So not a lot of reasons to come back in and move this stock. But what can you say? I wanted to get to some of the other stocks, if I can get back to them, that were moving out here. And, how did I get to them? Let's check in on the markets. I've been talking for a while here and haven't been watching. 1862 I have right now, down $16.34, 2.23 billion shares. So volume is light as we go into the close out here, but we'll continue to keep an eye on a lot of these. Again, when you're looking for the VIX out here, up $1.33, up a nice amount. But again, you have to look for what's actually going on in the price of the options underneath it. And, of course, those will tend to decrease pretty much into the close. But that normally starts every Wednesday. They come back and kind of start merging again about noon on Monday. So we'll have a little bit of displacement, but you should probably see the VIX pop back up, I would imagine, probably a quarter, maybe 30 cents Monday morning. We'll be back in just a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Well, this is going to be an interesting close as we're down here kind of probing these lows. But you got some more things to look forward to next week. Looking to see how this market closes. Got LinkedIn on May 1st. Look at this thing. Boy, I tell you what, I thought LinkedIn would hold up a lot better than it did. But boy, this thing, pretty ugly out here. And I had a few callers that came in. I thought there were other stocks that would move faster, but this did come along and go down just as well as the rest. But I think when I was talking about it, we were back up here in the 200s. This thing pretty much failed over the last, 20 days. Yeah, but pretty ugly. Looks like it's going to go to that 160 level, and got earnings on Monday. Did want to talk to everybody in the very end of the show here about net neutrality. We brought it up a little bit yesterday. I said call your senators and congressmen. There's one other thing I would ask you to do for us here at TFNN, and that is that there is a petition at whitehouse.gov. You can go on and do an online petition. If they have 100,000 people, they will go ahead and do a response. It is quite a well-worded one. We'll talk about it in the Tom O'Brien Show at 4 o'clock. But if you enjoy TFNN and the hosts on here, Tom O'Brien especially. Not saying it will, but it can be highly problematic for companies, especially smaller companies like TFNN, to afford to pay off companies like Comcast and Verizon and everybody else with this new super retarded idea that you should have to pay for high-speed access to video and audio. Now, we're going to go through that a little bit tonight, and we'll get Tom's opinion since he does own the show. He's put in a lot of sweat and blood on this. But to me, it's hard to fathom the 180-degree drop, or 180-degree turnaround that the FCC has done. All it takes is two things. One, the FCC to say that ISPs are common carriers and that you shouldn't treat any data any different no matter how much data there is. If you want to charge your customers for more or less data, then do it. This is just an end around to let companies like Comcast and the rest, AT&T, continue to lower their CapEx, but try to get more money and squeeze money out of consumers. But if Netflix goes to $10, I'll guarantee you Comcast is getting that $2. So it's one of those things where we need to be watching out for companies that want to deliver you free things like the power trading hour that may not be possible economically if we have to pay off the dam upstream for someone that wants to cut off all the water to our cattle, if you want to go back to the Western Range days. But go to that the whitehouse.gov petitions and you'll see it and read it. But basically all it says is we're going to treat all data the same. And I don't see why different data, just because Comcast wants their greedy little fingers all over it. Anyway, we will be back in the 4 o'clock hour. Until then, I want you to remember to sell when you can, not when you have to. And you'll see us here at 2 o'clock. Same bat channel, same bat time, as always. Thanks to all the people that called today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.